All right, so that's a interesting question. I've never really revisited my first property investment. It was a little over 10 years ago, 2003. It was a purchase of a service apartment in Cheras. At that time, it was out of necessity. Actually, we were looking into moving from the office that we rented out to a place of our own. So we were looking in the market, and we found a good a good property in Cheras Business Center actually. And the funny story was we had two choices at that time. One that was overlooking an inside road, and the other was looking the main road, which was MRR2. So everybody knows where that is, MRR2. And the asset selection criteria at that time was we didn't want to be facing the big highway, the MRR2, because it was noisy. So because of that, we bought the one facing the inner road. At that time, I was only 20 plus, just finished university, and to tell the truth, I was really clueless about property investment. I didn't really see it the way that I see it now. I had to select the assets and then go through the financing process and know anything about the legalities and taxation. I was clueless, totally clueless. I didn't know what it was all about. I didn't know how to apply for a loan, and I didn't know if it was even a good thing to do. I was a bit scared buying my first property, but I just forged through and borrowed some money from my mom to buy that first property, and like they say, the rest is history. But the important thing was we selected an asset at a good location, which I'm still keeping now actually, this first property of mine, and it's almost near 100% occupancy. It's also collecting very, very good rent. As usual, sometimes the tenant pays a little early, sometimes they pay a little late, but basically it was a good asset to get into. So at that time, I didn't even know how to apply for a loan, and at that time there was a bank that was in walking distance from that unit. So I thought, hey, I bought a unit there, so I think I'd like to open my company account there. So I'd apply for a loan there as well. So that's how it all started. I was lucky along the way. There were good loan officers that helped me along the way. So that's how I started my first investment in property. So what happened then, how I grew my portfolio was I always looked at taking the positive at refinancing the property. So this property that I bought in Cheras Business Center, it grew in value. The market value grew, so I refinanced it to get some money to invest in more properties. So I didn't abuse or misuse that refinancing. Instead, I put it into more properties. And in the beginning stages, when I grew my portfolio, I also looked at a lot of zero money down deals, or deals that required very little capital outlay for the deposits. So sometimes it was some rebates or credit notes by developers where the S&P prices remain, and then there was some refunds and rebates later. So we only needed to come up with 2-3% of the capital outlay or the deposits. So I think in the beginning stages it was very crucial for me. We had the ability to refinance because we bought good properties along the way. So we refinanced that to raise some good debt to invest in more property, and we always looked at deals that needed very low capital cash outlay. So that's how we started growing to accumulate the assets. And at the same time, after that, after a couple of years, the business also started to grow. And the best thing is banks, the bank that we were partnering with in property investment and also in the business, they supported us. It's very crucial to get the bank support in the beginning stages and throughout your journey as a property investor. And what happened was the banks continued to lend us more property loan, because the business was active, it was profitable, and there was good cash flow. And we optimized everything that we got from that primary source of income, which was the business, into property investment. And along the way, I made it into a real business, a property investment business, where it was a new income stream for our group of companies, and we derived good rental income from it. And along the way, when the price was right, when the time was right, we sold it for some capital appreciation, and then we reinvested that to buy more and more property. So our model has never been to realize any of these profits, but instead, whatever profits that we have, whatever cash flow that we make, it all is put into by accumulating more assets, and that's just the model that we use in the beginning stages.